Hello, everyone. Welcome to a new episode of News Interpretation of Blockchain. In today's program, we will continue to bring you the latest, hottest, and most valuable news from the crypto world. From macro policies affecting the market to the latest trends of mainstream currencies and in-depth analysis of industry hotspots, we strive to help you grasp the most comprehensive market pulse in the shortest possible time. Now, let's take a look at today's headlines. First, let's focus on two major news stories from the U.S. market. The U.S. Securities and Exchange Commission, SEC, and Ripple Labs have reached an agreement to jointly drop their appeals against the July 2023 court ruling, officially concluding the nearly 5-year legal battle. According to the ruling, Ripple's sales to institutional investors were deemed illegal securities, while Blind Bid's sales to retail investors were not, and this landmark judgment is now the final verdict in the case. Following this news, the price of XRP surged over 7% within a few hours, once again demonstrating the immense impact of regulatory clarity on market sentiment. The end of this legal battle not only brings new opportunities for XRP, but also provides a valuable precedent for the entire crypto industry regarding regulatory compliance. Following this, major news also came from U.S. President Trump. He has signed an executive order aimed at clearing the path for cryptocurrencies to be included in American 401k retirement plans. The order directs the Department of Labor to reevaluate the treatment of cryptocurrencies by retirement fund managers and to coordinate with other regulators to treat crypto similarly to other asset classes. In addition, Trump signed another executive order to prevent the debanking of crypto firms, threatening to penalize banks that refuse to provide financial services to crypto businesses for political reasons. These measures are seen as a strong signal from the U.S. government to actively integrate cryptocurrencies into the mainstream financial system, with profound implications for expanding the investor base and attracting more traditional capital into the crypto market. Next, we turn to the latest movements in mainstream cryptocurrencies and market hotspots. Influenced by the positive policy news, Bitcoin's price surged past $117,000, setting a new daily high. However, this price increase was accompanied by volatility. Despite this, a notable on-chain data point shows that Bitcoin's implied volatility has dropped to its lowest level since October 2023, suggesting that options traders are not yet rushing to hedge risks, and the market is gradually mimicking the stable bull market pattern seen on Wall Street. Some analysts believe that such a compression in volatility often precedes a major price breakout. In the wake of Trump's executive order, the market saw a wave of speculative activity, with nearly $300 million in Bitcoin short positions being liquidated, but trading volume and buying pressure quickly returned to pre-news levels. This indicates that while the policy news provided a short-term boost to market sentiment, the market still needs time to digest it and find a new direction. Ethereum's price has also performed strongly recently, with gains exceeding 5%. Against this backdrop, analysts at B7e have proposed an interesting view. Ethereum's design may be making it a more attractive store of value than Bitcoin. They point out that Ethereum's shift to proof-of-stake, PS, has resulted in its inflation rate turning negative, meaning ETH's supply is decreasing, a contrast to Bitcoin's fixed, but still increasing supply. Furthermore, Ethereum's staking rewards and more flexible governance model are making it increasingly popular for institutional digital asset treasuries, DTS. This shift suggests that Ethereum's narrative is evolving from merely a world computer to digital gold, with significant long-term value potential. As a representative meme coin, Doge has recently seen its price surge by over 8% in just 24 hours. This phenomenon was accompanied by high trading volume, and some analysts suggest it may be due to concentrated buying from whale addresses. Doge's sharp volatility once again reminds us that while the meme coin market is full of speculative opportunities, it also comes with immense risks. Its price is significantly influenced by sentiment and external events, lacking strong fundamental support. For investors, it is crucial to remain highly cautious when participating in such assets, strictly controlling positions and avoiding blindly chasing pumps or panic selling. The Korean crypto custody institution DAX has started offering institutional custody support for XRP. This is part of its partnership with Ripple, established in February, aimed at providing regulated access to XRP for institutional investors in South Korea and promoting its global institutional use. Meanwhile, the blockchain fintech company Figure Technology Solutions has confidentially filed for an initial public offering, IPO, with the SEC. The company offers services such as lending and real-world asset, RWA, tokenization through its Provenance blockchain. These developments indicate that the crypto industry is actively integrating with traditional finance, attracting a broader range of investors and users through innovative products and public listings. While the overall market performance has been volatile, institutional capital inflows remain strong. The State of Wisconsin Investment Board disclosed a $321 million Bitcoin exposure through BlackRock's iShares Bitcoin Trust, IBAT, and Grayscale's Bitcoin Trust, GBTC. In addition, the State of Michigan Retirement System has significantly increased its holdings in the ARK21 shares, ARKB, Bitcoin ETF, with its stake growing to 300,000 shares. This indicates that Bitcoin ETFs are becoming a crucial entry point for institutional investors into the crypto market, driving continuous institutional capital inflows. Financial technology company Block Incorporated, founded by Jack Dorsey, released its Q2 earnings report. The report shows that the company's Q2 gross profit grew by 14% year-over-year to $2.54 billion, exceeding market expectations and pushing its stock up 6% in after-hours trading. However, it's worth noting that the company recorded a $212.17 million remeasurement loss on its Bitcoin investment during the quarter, a sharp contrast to the $70.12 million gain reported in the same period last year. This reminds us that, even for tech giants, Bitcoin investments face the risk of price volatility. Gaming company SharpLink Gaming has successfully raised $200 million through a stock offering to further fuel its Ethereum buying spree, pushing its total holdings beyond $2 billion. In just 2 months, the company has become the world's second-largest corporate Ethereum holder. SharpLink frames its Ethereum as an infrastructure reserve, and all its ETH is currently staked to generate yields, which creates a compounding dynamic for shareholders. This strategy shows that an increasing number of companies are beginning to view crypto assets as part of their long-term financial infrastructure, rather than just speculative tools. Following the conclusion of the SEC lawsuit, Ripple announced it would acquire a stablecoin payments firm named Rail for $200 million. The acquisition is intended to deepen its Rust stablecoin ecosystem and provide a more comprehensive payments service. Rail's capabilities, including virtual accounts and automated back-office systems, enable customers to transact in digital assets without needing to open dedicated crypto bank accounts. The deal, expected to close in the fourth quarter of this year, will help Ripple gain a competitive advantage in the crowded stablecoin market. Web3 investment firm Animoca Brands, in a joint venture with Standard Chartered and Hong Kong Telecommunications, HAT, has formally applied for a stablecoin issuer license with the Hong Kong Monetary Authority, HKMA. This move, following the enactment of Hong Kong's stablecoins ordinance on August 1st, signals that private financial institutions are actively responding to build Hong Kong into a leading hub for stablecoin development in Asia. India's Ministry of Finance recently disclosed that it has uncovered $72 million in undeclared crypto income and issued tax notices to 44,000 individuals and organizations. While this move is aimed at improving tax transparency and compliance, some industry leaders argue that India's stringent tax policies, including a 30% capital gains tax and a 1% tax deducted at source on every trade, are driving a large number of domestic traders to offshore platforms with limited oversight. This, in turn, may harm the long-term development potential of India's local crypto industry. A UK-listed oil and gas company named Union Jack Oil is exploring a new path to monetize its natural gas resources by turning to Bitcoin mining. The company plans to partner with a Texas-based firm to deploy gas-powered electricity infrastructure and Bitcoin mining units directly at its natural gas wells. This innovative model aims to convert underutilized natural gas resources into Bitcoin and hold it as a corporate treasury asset. This initiative not only showcases the flexibility of Bitcoin mining, but also provides a new revenue stream for traditional energy companies. Cybersecurity firm Sentinel Labs has disclosed a scam campaign that utilized aged YouTube accounts to promote fake crypto trading bots, resulting in over $900,000 in crypto assets being stolen. These fraudulent videos claimed to offer free trading bots and lured victims into deploying smart contracts that secretly embedded the attacker's wallet. Once victims funded the contracts, the scammers could drain the funds. This serves as another crucial reminder for investors to be highly cautious of any tools in the crypto world that promise get rich quick or easy profits. It is essential to thoroughly research and validate any tool and avoid deploying unverified third-party code. An adult content company named Fake Taxi has launched a creator coin, a new type of social token on the Base network. The token grants holders access to exclusive content and community perks. While this event is strongly satirical and controversial, it reflects a new trend in crypto regarding tokenization and community building. It challenges the boundaries of traditional finance and social media, demonstrating a novel approach to content creation and the creator economy within Web3. However, investors participating in such projects should be fully aware of their high risks and uncertainties. Thank you for tuning into this episode of News Interpretation of Blockchain. We'll see you next time.